baby, baby, baby. Uncle Paul talking to you. You see this man that looks like poo-poo. He's gonna end you. Welcome back to Strong Man Personal Finance. I got a very special video for you today, ladies and gentlemen. In this video, I'm going to save you $30 a month. That's right, $30 a month. It's just the price of a cup of coffee every day. Because I've hacked the stock analyzer tool. Because nothing pisses me off more than freaking grifting. And that includes you, Everything Money. Now, I used to think y'all were legit, right? You know, you actually looked at financial statements. You know, you did some kind of analysis. Oh, that's great. And then I saw the grifting come to the forefront. That's right. Oh, you can just trade options and sell puts, and you make lots of money. Oh, yeah, you could beat the market by 8-9% per year. Y'all are scum, okay? So it's about high time you got dethroned. Now, I see comments that are saying that I'm going to get sued by Everything Money. I literally just made a discounted cash flow tool. That's all I did. To make the whole tool with all the colors and it took me about an hour, okay? But if you wanted to make a simple discounted cash flow sheet, it takes 10 minutes. I'm not even freaking joking, okay? So what I'm going to unveil to you people, and before I release this to the public, I want to show you what I did. And I'm inviting anybody that actually has knowledge of finance to critique this because I want to make sure it's absolutely perfect before I give it out absolutely for free. So let's go ahead and reveal the grand reveal of the stock analyzer tool and look at the doom. Behold the doom of Everything Money. So, ladies and gentlemen, this is the stock analyzer tool. And it may look pretty familiar to you, okay? You got low revenue, my revenue, net income, free cash flow, PE, price to sale, or price to free cash flow, discount rate, and share change. Now, a lot of people think this is rocket science, okay? But here's all Everything Money does. They take the trailing 12 months of revenue. So find any company, and I'll show you exactly how to do that. It's very hard, okay? Find any company. It's absolutely free, okay? I like to use stockanalysis.com. It's freaking free. I mean, you can pay for like extras, and you can actually pay like, I don't know, $9 a month, and you can download all the financial data. But go to stockanalysis.com, right? You go to Meta Magetta, and you go to income, and you go to trailing. And you could see for the revenue for the top line, they have the trailing 12 months revenue. So what they do is they add up all the revenue over the last 12 months, and they put that here in this number. So what I literally did was just copy this number. Remember, this is in millions. You always want to check up here. Financials in millions, okay? Be very careful. And also be careful because there's foreign companies that are denominated in foreign currency. And if you're trying to get a dollar price, you could screw it up, okay? Anyway, so you take the trailing 12-month revenue, you copy it, you go to your stunk analyzer tool, and you paste it right in here. So you can see, I'll zoom in for you blind clowns. How do you like my artwork, by the way? You literally paste it into here, and you get trailing 12-month revenue. And then you go back and you say, okay, well, how many shares outstanding do they have? You scroll down a little bit on the same page, and you see they have 2.704 billion shares outstanding. So you copy it, and you paste it. That's literally all the work. Let's say you have this tool, right? That's literally all the work that you have to do. Now, on a very basic level, that's all you have to do. That's it. Everything else is automatically programmed into this. Now, what I did, I'll show you exactly what I did. So each one of these categories has a different buy point. You have your buy point based on your assumptions of profit margin on the accrual basis of accounting, earnings. And then you have a buy point based on free cash flow. Now, keep in mind, whatever number you get on here doesn't mean you should buy it, because Everything Money's tool has a massive fatal flaw that makes it almost unusable, in my opinion, which this tool, if you know how to use it properly, resolves. At least it'll give you a more accurate depiction of the company. Okay. So let's go and look at the calculations. And I literally just did the same calculation 6 different times. So you see, for example, you have this thing outlined and there's a black stripes on the top and bottom. I did this 6 separate times. And what happens is these numbers feed in the revenue growth rate, the net income, the free cash flow. All of these numbers feed into these formulas right here. So for example, this top one is your low assumptions for net profit. This is how I calculated the buy point. So I did this for a 5-year time horizon. Now, I don't have the Excel skills to make this be able to customize the time frame. I guess I could do it if I took long enough, but I don't have that much time, okay? But this is a 5-year discounted cash flow, or discounted, it's not even a discounted cash flow because GAAP earnings isn't necessarily cash, but it's 5 years only. So for example, my revenue growth rate assumption is 3% for my low side. For Meta, my Jetta, my Serengeti, my Give Me Hetty. So what it does is the tool, the calculation, takes the trailing 12 months right here. It takes this number and it multiplies it. It increases it by 3%. So you can see the top line of revenue increases by 3% every single year. So this is 1 year out. This is the projected revenue of Meta, assuming a 3% growth rate in Meta. So here we have entry G3 on the first page times 3%. Okay. Then the next year, year 2, it takes the entry before it and it multiplies it by 3%. You see how it references back to the initial sheet? And it grows it and it grows it and it grows it. Now, the next line I have here is net income. How do you calculate your net income? Because if you go back and you look at the sheet, the net profit margin for the low assumptions is 23%. So what it does is it literally takes the revenue, let's say for year 1, and it multiplies it by 23%. So now you have the projected annual bottom line profit of Meta, assuming your assumptions, okay? The next line, it takes the shares outstanding, which it references back on the main sheet. So you go back to the main sheet, you see 2.704 here, and you got 2.704 here. It's referencing that. What it also does is it projects out if you have a share change assumption. Let's say you think Meta is going to keep buying back shares, right? Well, let's say you put a -1 in here. Well, you can see if you go back to the tool, the shares outstanding are decreasing by 1% every single year because the formula that I have in here does that. Next, we have earnings per share. How do you calculate earnings per share? Well, you take the net income and you divide it by the shares outstanding, okay? And if you think about it, the fewer shares you have, the higher your earnings per share because the earnings they stay the same. They stay exactly the same, you know? But if you're changing the shares outstanding, your earnings per share goes up. That's why that's why you should be a fan, theoretically, if it all makes sense, of share buybacks. Okay. So now I have my earnings per share. Now that's my DCF, right? You just add them all up. No. Well, there's another thing you have to do. You have to discount the earnings. Okay. Because $1 today is worth more than $1 in the future. And the higher the rate of return you want, the more you're going to have to discount those earnings to get that desired rate of return. So what happens is, if you go back to the entry sheet, the discount rate. So right now we have 10%, right? And if we look at B1 or B8, 6 or 9.61. If I increase my discount rate to 20%, it goes down because you have a higher discount factor. Hopefully that makes sense. So after all that work, I get the discounted earnings per share every freaking year for Meta, my Jetta. And the last thing you do, I'm going to remove this crap for my delicious tool is you add up the present value of all the future cash flows. Now, what I do is I find the market cap at disposition. How do I find the market cap for Meta? Well, one way you could do it is take the earnings and multiply it by the price to earnings ratio. So you can see here, I took the trailing 12 months earnings on the 5th year and I multiplied it by the price to earnings ratio. That gives you the company's theoretical market cap when you sell it. And now that you know the market cap of the company, then you can find the share price. What would the share price be? Well, if you have a market cap of $318 billion in 5 years, your share price must be the market cap divided by the number of shares outstanding. So part of your tool, and in this example, Meta share price is $123 in 5 years. That might be completely insane. I don't know. But you also have to discount the stock price, because what happens is part of the discounted cash flow is you're selling the stock. At the end of the 5th year, you're selling the stock, and that's a cash inflow. You have to factor in taxes too. So to get the buy point, I literally just add up the present value of all the future cash flows. It lets me freaking zoom out. Let me zoom out. All right, that's a lot of zooming. So just to review, project out the revenues. That's here. Then you can calculate the net income. Then you can calculate the shares outstanding. Then you can calculate the earnings per share. Then you discount those earnings per share. You assume you sell the stock at the end of the 5th year, cash inflow, and you have your buy point. So I literally just freaking did that for every single assumption, okay? And it took me about an hour because I made it pretty and I had to make this. But it's as simple as like, why would you, if you knew how to make this, what's the point of paying EM? I'm trying to understand the value of paying them. Now let's talk about the fatal flaw of Everything Money's tool. All right, let's go look at Corsair, my horsehair. Corsair, my horsehair. Now let's say you're doing your DCF, discounted cash flow, and it was right after the June 30th financial statements came out. We can see that Corsair, my horsehair's revenue was $2 billion. Well, look what happened to Corsair after that. Look what happened to Corsair's revenue. It massively collapsed because Corsair was basically in a bubble. Well, if you were using Everything Money's DCF stock analyzer tool, you would start your assumptions from this number. Because if you were somewhere here right after the earnings date, you're using this number. And if you say Corsair is going to have a 1% revenue growth rate, well, your 1% rate is going to be based off of this number right here. And that doesn't freaking work, because if you actually did research into the company and you saw it was in a massive bubble, you would probably project that revenue was going to collapse. Maybe, right? So with this tool, you can actually customize it. Everything Money's tool, you can't do that. You can't go and put in the trailing 12 months of revenue and then go and individually customize the revenue every single year. But I can literally go in here and change the numbers, okay? And this is Meta, right? Let's say I think Meta's revenue is going to be, I don't know. Let's say that's fine. Let me say it's going to be $150 billion the next year. I can customize it because I can look at the company and I can say, well, they're going to have a bad year and I think the revenue is going to be this year. And then the next year, I think the revenue is going to be that this year, and blah, 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 blah. And you can literally customize the revenue every single year. And you can customize the net income. Let's say you think Meta is going to have a 25% profit margin one year going into the future. And then the next year, they're going to have a 35% profit margin. And then they're going to have a 32% profit margin. And then a 31% profit margin. You can literally type it in here and you can get a much, much better picture of the value, the buy point of the company. Okay. That's why the tool is freaking flawed. Now, is my tool flawed? Yes. Could there potentially be mistakes in here? Yes. I literally just hobbled this together in an hour. But I just wanted to show you that it's not hard to make if you understand the mathematics behind it. Now, Everything's Money's numbers are going to be slightly different than mine. And I suspect that's because they may be starting at a different revenue point. Because I can take the most recent revenue, trailing 12-month revenue. And if you go into their software, it might not have updated at that point. You might not be looking at the trailing 12-month revenue. Or if you are, you're looking at an outdated one. As soon as I see earnings come out, I can literally go and say, what was the company's quarterly earnings? And I can add up that quarter and the 3 quarters before that, and I can put that as my trailing 12-month revenue right here instantly. It takes 5 seconds. And I can potentially get the most updated shares outstanding, and I can use that in my assumption. And then if I want to go ahead and specify what the revenue is going to be every year, I could do that. What the profit margin is going to be. Maybe it's different every year. I don't know. Maybe Meta's going to do something in 3 years that we all know they're going to do, and they've said they're going to do, and it's going to potentially impact their profits by this much. And I could put that in the tool, and I can get an exact calculation. You don't even need this. Okay. You can literally just have one freaking thing and put the trailing 12-month revenue and then project it out or put individual numbers in there. Okay. So I am not going to release this tool yet. First of all, I want to make sure I don't get in trouble. And second of all, I want to make sure this is 100% accurate. But when I get to the point where I can release this, number one, you're going to have to sign some kind of like liability waiver, because you can't necessarily use this for instant investment decisions. You can't just type in the numbers and, oh, it's buy. I think it's a great way to potentially filter out clown stocks, because you can put something in here like Tesla and you can instantly see that Tesla is a clown stock, okay? And you probably shouldn't freaking buy it. But before you pull the trigger to buy a stock, you should do quantitative analysis, and you should do detailed quantitative analysis. You should really look and see what you think the revenue is going to be, what the profit's going to be every single year. And you need to do some qualitative analysis. Well, what's going on with Meta's market? What's going on with the macro environment? How are ads going to be impacted over the next 5 years? What's Meta's competition? How is that going to potentially affect margins? There's a lot that goes into this crap. Okay, that's why I buy a freaking index fund. But somebody explained to me why this tool is inferior to Everything Money's. And I made this in an hour. All the colors, all the prettiness, all the freaking math. I made it in an hour. And I have the shares outstanding. If you want to screw around with that, you can screw around with that. Okay? But I'm calling anybody. I'm summoning you. If you know how to do this stuff, and you've studied this stuff and you're pretty smart with it, I want people to beta test this and make sure all my formulas are correct. Because you go here, I did freaking 6 different lines, and it could potentially easily be like that I'm referencing something incorrectly here. Okay. Now, the coolest thing about this is, number one, with Excel, you can customize it however you freaking want. I put the average of the buy points. So let's say you do a DCF, right? And you see that the buy point for earnings is $115, and the buy point for free cash flow is $124. Well, I put in a formula here, and now I see the average price. I don't have to do anything in my head. Microsoft Excel, it's beautiful, okay? And I can literally determine what the stock price is going to be when I sell it based on my assumptions. I did a quick formula, and there it is. And you can add whatever you freaking want here, okay? You can even find a way to recreate their 8 pillars by finding whatever trusted source of information you want, having it paste in here in the next, let's say, in a blank Excel sheet in the same format, and it can do all the freaking formulas for you easily, okay? And you can customize everything. You guys see that? There's nothing special about this. There's absolutely nothing special about this. Now, of course, if you sign up for their stuff, you get access to all their little tools you have. You get access to their Discord. So I'm not going to say there's no value, but the way they've gone has just been an absolute freaking disaster. Options, really? Day trading? And then you fire Seth like a freaking bussy and you keep Mo on there? Come on, man. What a freaking joke. So if you want to volunteer and don't be a clown, I'm going to vet you, okay? I want you to send me a DCF. or show me how you would discount cash flows before I send this to you to look at, because I don't trust half you clowns. And you should not make this you should not automatically make this as the source of your investing decision. All right, let's go ahead and do some comments. Strongman getting sued. How would I get sued? Okay, it's a DCF. Okay. And if I wanted to publish one, I mean, I could make it so different that it doesn't even reflect their tool at all. SETH logic, 10K to photograph a wedding and $80 per month for fake investment advice. Common theme, dumb consumers like that being ripped off. I mean, if you have no idea how to make it, it seems really cool and fascinating, but the math behind it really isn't that hard. Okay. Does Seth have a grill in the thumbnail? No, he has a halo. He's God. This analyzer tool will end EM's whole career. No, it won't. They'll keep growing. They'll keep talking about options, and they'll be billionaires. I always thought their stock analyzer was stupid. The main flaw is you can't customize it. Okay, that's a huge flaw. But if you make it in Excel, customize it however you want. Glad everyone is finally calling out EM. They deserve it. Let's see. Bruh, best channel on YouTube. Duh. Ooh, everything money. This is by far the creepiest strongman fit ever. I don't know why I decided. I saw in the closet and I was like, I'm going to wear this. But wait a second. I thought their 8-pillar tool was exclusive and complicated. You mean I could just easily make the same thing for free? Yeah, you can. If you have a trusted source of data, I mean, honestly, I could probably do that. But you'd have to be careful that the data imports exactly as you want it. But yeah, you could calculate that. I mean, let's go to stock analysis, okay? So isn't one of their 8 pillars debt to free cash flow? Something like that. Oh, free cash flow to long-term liabilities. Well, if you imported this data, what are we looking at? Let's go to Meta. I want this trash off my screen. If you went to Meta, you could literally go to their cash flow statement. Let's say you copy and paste this into Excel, and the Excel knows how to reference free cash flow because you tell it to. And they're like, oh, does the free cash flow, what is it like? Free cash flow is more than 5, whatever. Okay, something about liabilities. Or can you pay off the liabilities with the free cash flow? Something like that. Well, you can literally tell it to freaking reference this, and then you can copy and paste the balance sheet into your Excel tool, and you could calculate your formula. Or if you want to look at the PE ratio, I mean, this literally has the ratios, okay? You can literally just copy and paste the ratios and average them out. It's not hard. You just need to have a little bit of patience, understand what you're doing, and have a trusted source of data, which you should independently verify, because sometimes this crap can be wrong, and do it that way. And then you have the ability and flexibility to customize. So that's kind of my point there. Does this mean I paid $30 a month for nothing? Well, it depends on what you bought. I mean, if you want access to the Discord, I mean, they offer stuff. I'm just saying, the DCF stock analyzer tool, it's not special. They invested hundreds of thousands to make it. I'm not joking. This thing right here, the reason it took me an hour to make this was because I had to let me delete this. Actually, I'm just not going to save this when I'm done. I had to take this and I had to replicate it 5 more times. And then I had to go and reference each line to the freaking corresponding entry. That's why it took a long time. But you can literally just make an Excel sheet and just take this information right here, what I'm highlighting, and then you can just have this, and then you can screw around with it all you want, and that's all you freaking need. You don't need the pretty little colors and the percentages here. It's helpful and it's pretty, but you don't need it, okay? So once the tool's made, I mean, I can literally just copy and paste these 2 in here for whatever company I'm looking at. Done. Easy as that. By the way, is Meta a buy? Let's see. Well, my low assumptions say no. My middle assumptions say yes. And my high assumptions say yes. Oh, yes. Now, there's probably a way you can make change the colors if it's, over its current share price. And I think there's a way, I don't know how you do it, but you can actually import the current stock price into Excel. I don't know if you have to pay for that I'm not paying for it because I can just do it in 5 seconds. But it's pretty easy. That's my whole point. Let's see. How much you lift using steroids? I lift more than you, and I do not use steroids. But does it have the 8 pillars, bro? You can replicate that as long as you have good data. Strongman isn't on steroids. That's all McDonald's and Krispy Kreme. All right. Who's volunteering to help me with this? Let's see. I just spent 30 minutes listening to Jeremy PF Moon video. What a guy. Yeah. You think Jeremy knows how to make this? Let's see. Strongman needs to learn how to use Google Finance Meta Market Cap command. Okay, let's see if this works. I'm going to test this. Hold on. If this doesn't work, I'm going to be pissed. Equals Google Finance Meta. Sorry, this is giving me freaking hemorrhage. Do I put market cap in quotes or no? Oh, it didn't work. What am I doing wrong? Name? What's up, bro? Thought this was supposed to give me the meta whatever. What does this do? Google Finance. I don't think I have the plugin. That's my problem. Whatever, I don't give a crap. Okay. I can just copy and paste in 5 seconds. I hope Paul sees this. Oh, yeah. I'm sure he'll watch the video. And, oh, well, he's just some broke guy in his garage. Or Mo. Mo, my stink blow. Get the market cap of Tesla and divide it by the PE ratio of Google. Then take the public float of GameStop and ignore that. What number do you have? That's how many shares of Amazon to buy. That's better than Little Fufu's analysis. He's on Excel, though. Chris, have to use the stock function. Tickers. Okay, I need to look that up. But, I mean, like, I'm going to be doing a lot of work on this, and I can make this to the point where it's just delicious. But my biggest concern is liability, because I don't want some clown I give this out for free, which I intend to, but that's been my reservation for a long time, is if I give this out for free and then one of you freaking clowns puts in a Tesla growth rate of 60% per year for 5 years, and then you get a buy point of $1,200 for a 10X, and then you lose all your money. Oh, it's doing strong, man. Yeah. People will do that too. This clown defended everything funny. I was wrong. I admit when I'm wrong, ladies and gentlemen, okay? And plus, they got rid of SETH. Let's see. Let me run those figures past Jeremy. What? You see off? But Strongman, I don't want to understand mathematics. I want Paul to just do it for me. Yeah, well, that's why I want to get this out for free. Okay? Let's see. I think as long as you don't compare it to EMU, it'll be good. Just don't compare it to them, LOL. I mean, yeah, I can really modify it where it doesn't even resemble their thing. I could do it. Scott Schaefer's releasing this on his channel. So, honestly, I can see him doing that. Strong man. Why would you get in trouble for doing a simple cash flow analysis? Well, the trouble, number one, is I don't know how the freaking law works, okay? This is obviously a ripoff of Everything Money. But the fundamental math behind it, I didn't steal this from them. I mean, it's freaking, I just did a little DCF thing here, okay? Now, if I modified this and I don't know, just had maybe one sheet where you just punch in the numbers individually, that doesn't reflect their thing at all. And maybe I could do a thing where you can customize and, instead of calling it the 8 pillars, it's, I don't know, good metrics. I mean, then it wouldn't resemble their thing at all. But you never know with the law. And then on top of that, it's just, like I said, clowns that use this and lose all their money. Oh, let's see. I mean, you could just look at PE for a lot of those, and it would be able to as reliable as their analyzer tool. There's a lot of things you can look at, but I'm just saying it's not hard to make. That's all I'm saying here. You should definitely be able to compare it to EM skills. Just can't make it seem like it's their software. They could probably bullshit a way to get you for slandering or compare it to their software. That's what I'm saying. Like, you know, they take a simple tool. Oops. They take a simple tool and they put it and they spend hundreds of thousands of dollars. I spent nothing. Maybe some electricity. And I made the same thing in an hour. But, oh, I'm suing you. You should interview Seth again and ask why they don't. I think they have some kind of like non-disclosure signed. Divide number of SKUs by average shelf space times Kroger plus Walmart stores in 200-mile radius. Does your software say Palantir is a buy? Let's go do some Palantir analysis. Let me show you this beautiful tool in action, okay? Palantir. Le Palantir. So we have Palantir. It's the future. Technology. Alex Carp. Peter Thiel. Trailing 12-month revenue. We got $1.744 billion. Okay. So paste this in here. See what I'm doing, okay? Did I get that right? $1.74 billion. How many shares outstanding? 2 billion. Oh, God. I think that's 2 billion. Yeah, that's 2 billion. Okay. So that's it. Now I'm done. Now I can just do the math. Let's say Palantir. How fast will their revenue evenue? Let's go look at the most recent quarterly. So their revenue is slowing down. It's like 25 year over year. You know, let's just put some freaking numbers in here. 15, 18, and 21. Profit margin. Oh, I'm just going to make one up because even though it's not profitable, because you can see profit margin, negative 37. But instead of putting, I don't know, negative 37 in there, let's just put 10% because why not? 12%, 15%, whatever. This is just BS. Don't get your panties in a freaking wad. PE at this position. 12, 14, 16. Price free cash flow 12, 14, 16. Discount rate. Let's do 27, 25, 29, and 34. Look at yeah, they got really different numbers than me. Let me go look at their video real quick. Everything money. Maybe they had a different time frame. Sometimes they use the 10-year analysis. Mine's only 5 years. Where's their Palantir video? Palantir, it's the future, bro. Because it gets me lots of YouTube views. I can just say I sold puts and people will click on my videos, bro. Am I freaking blind? Where is it? There it is. Yes, there's an ad. Shut up. I think I have it muted. What should you pay for Palantir? Let's get a good zoom in here. Okay. So, yeah, they have a 10-year analysis. That's the problem. So, they have 12, 17, 12, 17, 22. They have 10, 20, and 30. And they have 10, 20, 30. EE 14, 18, 22. 14, 18, 22. Discount rate 17.5, 22.5, and 27.5. Okay. So let's see what they got their numbers with their fake earnings that they discounted. Wow, the numbers aren't far off. Look at that. They got 1.39. Remember, they have a 10-year analysis. Mine's 5. 1.39. Mine's 1.3. Theirs is 3.26. Mine's 3.17. And 5.62. 5.61. I'm a genius. So hard to make, bro. I'm gonna start doing videos like they do. Easy money. Oh yeah. You guys like that Palantir analysis? You 10xing now? You gonna buy Palantir? You know, you discount fake earnings? Yeah. Let's see. Mike Stathis was the OG to call out. He was right, okay? I mean, he's a disgusting piece of filth and a grifter, but I mean, he was right. Long-term liabilities of free cash flow under 5. Yeah, you can literally take that. Like if you import the data into your Excel sheet, you can calculate that pretty easily. Your Excel doesn't teach you anything about it. That's true. It doesn't. Pay for a pillar. I want to be told, do your own research because the 8 pillars doesn't mean anything. I guess not. I mean, it's useful stuff. Like it's good to have data, but the tool, it's not. There's nothing special about it. Let's see. Use the data tab for the stonk import. It is, yeah, you got to be careful. And what I recommend, like if you're really doing this crap, which I don't really do, you need to go look at the actual 10Qs, the quarterly financial reports, and that's where you can actually see stuff in detail and see if the numbers check out. You really want to be careful with that because sometimes these stock aggregators, these data aggregators are wrong. You should start using this analyzer tool. You'd take away their business. Well, I'm not charging for it. I'm not selling this. See, I'm a freaking hero. What do I get? Crap. Let's see. Da, 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 da. You can get sued for this stuff in the U.S. If you're referring to people losing money, I'm sure you can't. Chris, can't you just add a disclaimer on the Excel sheet to absolve you from being sued? I need to speak to a lawyer, but then if I need to speak to a lawyer, then I got to pay thousands of dollars. You know, it's just like I'm just like stuck. Unless you're a lawyer and you want to do it pro bono, then I'll fluff you or something to pay you back. You can start selling your new stock analyzer tool by charging $20. I could make money off this. I really could. If I put this together and, sold it on a subscription basis, or maybe I had a one-time sale with periodic updates, like let's say you buy it and then I refine it and then I upload a newer version into Dropbox and you can download the newer version. I can make a lot of freaking money off this. But you know what? I'm just a freaking hero. Paul tried to get some cookies for dessert tonight, but the cabinet. Oh, God. Let's see. There's no liability issues here. The DCF is a patented. I don't think a DCF itself. But like I said, I mean, like, look at this, okay? Like, that's an obvious ripoff of everything money. Obviously. But I can just change some stuff around and then it's not. Let's see. Strongman, do you think you can win a wrestling match, an adult orangutan? You know, I've never thought about that. But, yeah, I can take anybody, bro. Strongman. You want to see my freaking body? People call me fat. Yeah, this is freaking fat man finance, huh? Freaking fat. Oh, you're fat. You're bald. Yeah, I'm freaking bald. I'm freaking bald. People are so stupid. Stupid insults. I mean, if you're gonna insult me, like at least like make it like legit. Discount rate because of risky assumptions. Man, I'm surprised how accurate that was. Even with I had a 5-year DCF and they had a 10-year. I'm a freaking genius. Okay, I'm just gonna pat myself on the back. Oh, Chris Bell, you're so smart. You're so smart. But of course, bro. You did it. What can I say? Years of studying accounting. You know, I actually learned this, like how to do this from bonds. Because when you're valuing a bond, it's the present value of all the future cash flows. And I was looking at their tool, and I was like, they keep saying present value, future cash flows. So I'm like, well, that must be like a bond. So you just project the cash flows and it's the same freaking thing. Palantir's discount rate should be the federal funds rate. Let's see what Jeremy's valuation is. This is going to be freaking hilarious. What is the federal funds rate? 3.25. Even then, it's not that good. Well, I'm sure Lafufu. Let's see what Lafufu would do. Let's go to the stock analysis. Well, for number one, he doesn't know how to use DCS because it's Jeremy Lafufu. But okay, revenue by revenue, 41%. Because no, he would take the highest number, so 47%. So it'd be, I'll be conservative and I'll say 40%, 45, and 50 for 5 years. And then their profit. He'd probably compare that. What is a very high margin business? Is Adobe super high margin? Adobe. Yeah, I don't know. Data analytics company. I don't know. Find me something similar to it. What's their profit margin? 30%. Jesus. We'll use 30%. 30, 32, and 500,000. Free cash flow will do the same thing. PE. Let's do 50, 60, 70. 50, 60, 70. Well, ladies and gentlemen, bearish case. It's a buy at $61.93 or $200,000. There you go. Palantir, massive buy. The discount rate should actually be the WACC. Well, yeah, but what if I want a super high rate of return? I actually did study that stuff a little bit. So in accounting, you're not like a finance genius, right? But you do learn like the basics of finance. Like you take like finance 101. I remember calculating the weighted average cost of capital. I think that might have been on the CPA exam too. You got to calculate the cost of the debt. Then you got to calculate the cost of the preferred stock if they have any. Then you got to calculate the cost of the common stock using the CAPM. And then you find the weightings, and then you weight it, and you add them all up, and that's your weighted average cost of capital. Okay, but I don't have time for that. Okay, if I want a 15% return, that's what I put in there. Oh, what's the WACC? You convinced me on Palantir. I'm going to join Deloitte, then move into Georgia to later get exposed on YouTube. I seriously want the market to fall. Well, I want the U.S. market to get utterly obliterated. Utterly, just gone. Because then I can laugh at people. Oh, the hell? Is this video going to stay live? Well, it's going to be live until I click out of it. Sell it for much cheaper than you don't have to feel guilty. I can't, man, because like that's when the liability comes in. I don't know, like, you can get a lawyer. And then somebody will just steal my sheet. You know what I'm saying? Like, I could sell this, and then some clown will just copy it and like change one letter somewhere, and then boom, there's my freaking profits gone. They don't have shares outstanding anymore. That could be your new addition. Well, it's in there. Like, I have the shares outstanding because you can actually change that. Now, theoretically, the buy point should change if I change the shares outstanding. Yes. Okay. Well, it's a buy, ladies and gentlemen. What if they're buying back shares? Palantir doing buybacks? Yeah, it works. It works. Damn, I'm smart. Mid shows more downside. I'm going to start doing videos with this stock analyzer because why not? Strongman, would you buy Palantir or Meta? Well, if I had to choose between the two, it would be Meta. But right now, I'm not buying any individual stocks. I'm not saying charge for a stock analyzer tool. I'm saying to make videos using it for the. Oh yeah, 100%. On this historic date in 2020, Meatspin decides to toss $5K. It's a hippo stock. OMG, my name is Seth, no cap. Your name is Daniela. Okay. Oh, Jesus. All right, guys, I think that's it. If anybody wants to volunteer to check this, and I actually have to trust you, you have to prove to me you actually know what you're doing. I'm taking applications. You can email me. And don't be a freaking clown because I'll catch you. Well, that's it. I hope you enjoyed my video. And you know what? I'm going to do a Tesla DCF after this because why not? Cheers.